Now, we are starting with the concept of partnership deed. What do we understand by partnership deed? Okay, let's see this. Till now, we have learned that partnership as per section 4 of the Indian Partnership Act 1932 defines that it is a relation between persons who have agreed to share profits of a business, okay, carried on by all or any of them acting for all. Let's see. Here we studied in essential features that agreement is very important. The agreement can be oral, the agreement can be written, okay. Even oral agreements are legally valid. So, this partnership deed is what? This is an agreement. Deed is a type of agreement, but in written form. Let's see. Partnership comes into existence as the result of agreement among these partners. The agreement can either be oral or written. The Partnership Act does not require that the agreement must be in writing, okay? But wherever it is in writing, the document which contains the terms of agreement is called partnership deed. So, let's do this. What is a partnership deed? The partnership deed, first of all, in a partnership deed, first thing, it's a written document. It contains what? Terms and conditions of partnership, okay. So, whenever a deed, partnership deed word is written, we will understand that it is a written thing, okay, and it contains what? What are the terms and conditions of a partnership? It generally contains the details about all the aspects affecting the relationship between the partners, including the objective of business, contribution of capital by each partner, ratio in which profits and losses will be shared by the partners, and entitlement of partners to interest on capital, interest on loan, etc. So, the clauses of partnership deed can be altered with the consent of all the partners. So, is it the question arises, is it once a partnership deed is agreed and signed by all partners, we cannot change it? No, we can change it, okay. The law allows it, it can be altered, but to alter it, consent of all the partners are required. That means out of 4 partners, 3 partners are agreeing, okay, let's change. No, they cannot. You need all the partners' signature and consent, okay. The deed should be properly drafted and prepared as per the provisions of the Stamp Act and preferably registered with the registrar of firms. Now, the word preferably written, okay. What is this? Who is a registrar of firm? Registrar of firm is a constitutional post created by Government of India. Like for companies, they have registrar of companies, the ROC, okay. For firm, partnership firm, they have ROF, registrar of firm. And the word, to be a company, they have to compulsorily register with registrar of companies. But here the word is written preferably. That means even if a partnership deed is not registered with the registrar of firm, that's allowed, that's legally allowed. So, let's see what are the different types of terms and conditions generally are contained in a partnership. So, contents of a partnership deed, contents of a partnership deed. The partnership usually, that means why the word usually is important, because it's not necessary that only these points will be included in the deed. You can include whatever point you want, just that the point should be legally acceptable as per the Indian laws. Now, generally the first thing, name and addresses of the firm and main business, ki what by what name the firm will be called and the firm will be in which line of business, manufacturing, trading, service, okay, and of what product. Then names and addresses of all the partners. Generally these are names and address. The third important thing which is always written in the partnership deed is amount of capital to be contributed by each partner and the accounting period of the firm. Key, they are starting the accounting from 1st of April to 31st of March. The date of commencement when the partnership is starting. Rules regarding operation of bank's account. That means what? Ki who, whether all the partners are required if money needs to be withdrawn from the bank, or they are giving authority to one or two partners, only that they are allowed to transact on behalf of all the partners or on behalf of the firm. Then profit and loss sharing ratio, that if profit or if loss, whatever the case may be, it happens, how all the partners will divide it. Okay, here the ratio word is written. So I'll give you an example. Let's see, there are two partners, okay, and the ratio is 1:1. What does 1:1 means? 1:1 means equal ratio. That means 50-50%. If we solve this ratio, how we can write it? Let's see, one partner's name is A and other partner's name is B, the most common name that we will use always. So what is fractionally, how A can be represented? 1/1 plus 1, and B also can be represented 1/1 plus 1. This is 1/2, this is 1/2. Let's see, there are three partners, one, then, and 1:1:1. So instead of 2 and 3, how they will be written? A will be 1/111, 1 plus 1 plus 1, 1/3. B will be, again, B is 1, numerator is 1, denominator 1 plus 1 plus 1. And in the same way, C is also 1/3. To understand this ratio and all better, when we'll do the questions, you will get a hang of it. Let's see. Then next thing that will be written here will be the rate of interest on capital loan drawings. In fact, in this chapter, only this point we will be doing. Okay, all the questions are for this point only. So rate of interest on capital, that if the partners are investing their money, their capital, okay, then will they get anything or they will not get anything. If they get any interest from the firm, okay, the firm can say, oh, you are giving me money. The firm, though it's not a separate legal entity, but it's an artificial person. The firm can say to the partners, okay, you are giving me money, I'll give you interest over it. There can be an option that there will be no interest, we will study it further. Or if the partners are taking any loan from the firm or giving any loan, what is the rate of interest? Or if the partners are taking money out permanently, then will the firm also charge drawings on it? All these things can be decided by the partners. Mode of auditor's appointment. Who is the auditor? Auditor is generally a chartered accountant who comes and checks the accounts, whether whatever the accounts of the firm are proper and are justified, okay, are true and fair. Then salaries, commission, etc., if payable to any partner. If, why? Because they are not compulsory. If a partner is working very hard, another partner is not working at all. First of all, is it allowed? Only one partner is working and the other is not working? Yes, it is totally allowed. Why? In our mutual agency, any of them acting for all, only one partner can act on behalf of all the other partners. So yes, if one is working very hard, he can demand, okay, only I am working, please give me some salary or give me some commission. Okay, if this is so, this can also be written in the partnership deed. The rights, duties and liabilities of each partners, treatment of losses arising out of insolvency of one or more partners, settlement of accounts on dissolution of the firm, that the firm is closing down, how we will close down the accounts, method of settlement of disputes, that if we all fight over something, who will solve our dispute? Will we go to court or we will go to an arbitrator? Generally, people write this clause that instead of going to the court directly, why to incur so much expense? Okay, we will appoint this person as the arbitrator, he can mediate. If we all agree with this, we will write down his name. Then rules to be followed in case of admission, retirement, death of a partner and any other matter relating to the conduct of business. Normally, the partnership deed covers all the matters affecting relationship of partners among themselves. However, if there is no express agreement on certain matters, the provisions of the Indian Partnership Act 1932 shall apply. And this, because of this, see, generally when we draw a partnership deed, we generally write about all these things, but it is not 100% that you have to write about these things. If there is no partnership deed, first of all, can there be a situation where partners don't make a partnership deed? Yes, the oral partnership, okay, there is no partnership deed. And even if there is a partnership deed written document, it is not necessary that all these points will be there, okay, it depends on partners. If there is no express agreement on certain matters, then what will happen? Okay, then the Partnership Act 1932 says that I have made certain rules. If you partners are not making any rule, then my rules will prevail. If you are making any rules, then your rules will prevail. Okay, we will understand what are these rules. All of you, what are these points? Okay, these are very important points, and these are what? These are rules which are in absence of partnership deed. That means in partnership deed there is no express agreement about if these points, then the Partnership Act 1932 has given these rules. The important provisions affecting partnership accounts are as follows. First of all, about profit sharing ratio. If the partnership deed is silent, okay, silent means it is not saying anything about the profit sharing ratio, the profits and losses of the firm will be shared equally. Okay, so I am just writing down all these things separately so that we will understand it better. The topic is rules in absence of partnership deed. That means either the deed either the partnership deed is silent on these points, or there is no partnership deed. Okay, so these rules will apply if there is a partnership deed but it is silent, it is not taking care of these points, or there is no deed at all. Then the first point about profit sharing ratio, in short you will write it PSR, okay, The point is about if at all the profit, there is no partnership deed, or if there is a partnership deed, they have not incorporated any provision regarding how they will distribute the profits and losses. Then it is the Act says, the Indian Partnership Act 1932 says that the profits and losses will be shared equally, like if there are two partners 50-50, if there are three partners 1/3, 1/3, 1/3, there are four partners 1/4, 1/4, 1/4, 1/4, five partners 1/5, 1/5, 1/5, 1/5, 1/5, like that, whatever, but everyone will get equal share. Okay. Now the question is, let's say there are 8 partners, how will do it equally? It's 1/8 for each partner. Okay. Like, to understand this, you can just imagine this as a pizza. Okay. We all love pizza. One, two, three, 4, 5, 6, 7, 8. Now, assuming that all are equal, okay, my writing and all is very bad. Let me do it, make it properly then. So see, I am assuming it to be what? To be a pizza. Now, there are 4 partners. Okay, this pizza is our profit. How will this distribute this profit equally? We will say, okay, 1 and 2 will be taken by A, 3 and 4 will be by B, 5 and 6 by C, and 7 and 8 by D. So everyone is getting 2 slices. So out of 8, A will get how many? Out of 8 slices, A will get how many slices? 2 slices. B will get how many slices? Out of 8, B will also get 2 slices. C will also get out of 8 2 slices, and D will also get out of 8 2 slices. If we solve this, 1, 4. So we can also say that A will get 1/4, B will get 1/4, C will also get 1/4, and D will also get 1/4. If this is in fraction, if I want to write the same thing in ratio, how can I write? A is to B is to C is to D equals to 1:1 1:1 1. To check that whether I have written it correctly, what I can say, I can see that there are 4 ones, 1 1 1 1. So 1 plus 1 plus 1 plus 1, 4. The denominator of everyone has to be 4. Now A is written first, so this one belongs to A, this one belongs to A. Okay. B is written second, so this is for B. C is written third, so this is of C, and D is written fourth, so this is of D. Now what can I do? I can say that the numerator will be this one and the denominator will be the total of all. So the numerator is 1, the denominator is total of all, 1 2 3 4. Got it? Now all this is okay. The first thing that we have written, rules in absence of partnership deed. And what is the rule if there is no partnership deed, or if there is a deed but it is silent about it? About what? About how they will share profits and losses. We will just call it profit sharing ratio. It also includes losses. Okay. So, and in short we call it PSR. What it is written, that equal sharing of profits and losses. Everyone will get equal share. The second thing is, the second rule in absence of partnership is interest on capital. Will there be any interest on capital? So, the deed says ki no dude, there will be no partner is entitled to claim any interest. There is no interest on capital, on the amount of capital contributed by the firm as a matter of right. However, interest can be allowed when it is expressly agreed to by the partners. Thus, no interest on capital is payable if the partnership deed is silent on the issue. In case of the deed provides for payment of interest on capital but does not specify the rate, interest will be paid at the rate of 6% per annum. Further, the interest is payable only out of the profits of the business and not if the firm incurs losses during the period. Very, very, very important things. Let's see. First we have written, let's move on to the second one. Interest on capital. So, let us see, this will happen in two cases. If no partnership deed or partnership deed is there, but is silent partnership deed is there, and also provides for interest on capital. Okay, deed is there. The deed has a point which says that interest on capital is to be given to the partners, but no rate is expressed or written. They have told that interest on capital is to be given, but at what rate, what percentage, they have not mentioned this. So, in this case, this is a simple case. When the partnership does, there is no partnership deed, or does not contain anything about interest on capital. Okay, if the deed is there, if there is a partnership deed, then what will happen? No interest on capital. That either there is no partnership deed or there is a deed, but it does not contain anything that any interest on capital is to be given to the partners. Then what will happen? Then no interest on capital will be given by the firm to the partners. Okay, nothing will be given. But if there is a partnership deed and it also states that yes, interest on capital is to be given to the partners, but they do no rate is expressed or written, they did not write any rate of interest, then what will happen? Very important. Interest on capital will be given at the rate of 6% per annum, but only out of profits. What this mean, only out of? That if the firm incurs losses, then this 6% per annum will not be given. But if all these conditions are satisfied, there is a partnership deed, it does mention that interest on capital is to be given, but just that they did not write any rate of interest, then interest will be given, but at a rate of 6% per annum. This 6% will only be given if there are profits. If there are losses, then this 6% will not be given. And in this case, when either there is no partnership deed or there is a deed, but here they have written that interest on capital will be given, here they have not mentioned anything about interest on capital, they just forgot about it, then no interest on capital will be given to the partners. Got it? Let us move on to the third rule. Third rule in absence of partnership deed is interest on drawings. Very simple. No, if there is no mention, then no interest is to be charged on drawings made by the partners if there is no mention in the partnership deed. So, let us write it down. What are drawings? Drawings are the money withdrawn by the partners from their capital. Okay, the firm can say, see, if you are asking me to give you interest on capital on the money that you have invested, I can also ask you for interest on drawings on the money which you are taking back from me. So, if there is no mention of interest on drawings, then no So, either there is no partnership deed or there is a deed, but there is no mention about interest on drawings, then no interest on drawings will be charged by the firm from the partners. The fourth rule, interest on advances. So, if any partner has advanced some money, see in this case, the partner has given a loan to the firm. It's not the firm has not given any loan to the partner. It's the partner who has given a loan to the firm. Okay, the firm sometimes needs money. Okay, like for a few days, like for 10 days, 15 days, the firm needs 1 lakh rupee. So a partner says, why to go to a bank and ask for a loan? I'll give you 1 lakh rupee. Firm, you pay me interest. So what they are mentioning, very important point. If any partner has advanced some money to the firm beyond the amount of his capital for the purpose of business, he shall be entitled to get an interest on the amount at the rate of 6% per annum. What it is saying? Fourth, interest on partner's loan to the firm. It's not the other way around. Okay, the firm has not given money to the partner. It is the partner who has given money to the firm as a loan, okay, and that loan only for business purposes. Okay, even if there is no mention about it, there is no partnership deed, does not matter. Okay, interest will be given straight away at 6% per annum. Okay, and this will be given even if there are losses. See, in that capital thing, if they have mentioned that interest on capital is to be provided, but the rate is not mentioned, then interest on capital at the rate of 6% per annum, but that too only if there are profits. In this case, even if there are losses, but the partner has given loan to the firm, even if there are losses, the firm has to give interest at the rate of 6% per annum. It can be more, but only if when they have mentioned that if any partner provides any loan, then interest at the rate of 10% or 12% per annum will be given by the firm. Here, if they are not mentioned anything or there is no partnership deed, still 6% per annum will be given even if there are losses. Remuneration of firm's work. No partner is entitled to get any salary or other remuneration for taking part in the conduct of business of the firm unless there is a provision for the same in the partnership deed. What it says. The partners might say that I am working so hard, a firm you should give me salary because others are not working, or the firm should give any commission on sales. If there is nothing mentioned or there is no partnership, then nothing will be given. No remuneration. No remuneration to the partners will be given. Apart from the above, the Indian Partnership Act specifies that subject to the contract between the partners, if a partner derives any profit for him or herself from any transaction of the firm or from the use of the property or business connection of the firm or the firm's name, he shall account for the profit and pay it to the firm. So, what is saying, if a partner uses the firm's property, firms use the firm's business connection, anything which belongs to the firm and makes a personal profit, the profit will belong to the firm. Another thing, if a partner carries on any business of the same nature as and competing with that of the firm, he and she shall be account for and pay to the firm all profit made by him or in that business. So, like if I started a business as a partnership, okay, and I started the exactly same business as the individual also, separate business, the money which I earn in my individual business, because they are same, the money will belong to the partnership business. Okay, this is written in Partnership Act. Let's test our understanding. Okay, in this video we'll just test our understanding about this and finish it off. Mohan and Shyam are partners in a firm. State whether the claim is valid if partnership agreement is, there is a partnership agreement but is silent in the following matter. Okay, they had an option that not to have a partnership agreement, but they had an agreement, but on these matters the agreement is silent, it does not mention anything. So, let's say Mohan is an active partner, he wants a salary of 10,000 per year. Okay, the partnership deed is silent about remuneration. Salary is a part of remuneration, what we studied. Okay, no remuneration to partners. Okay, so the answer here is no. Mohan's claim is invalid. So let's write down. Invalid claim. Why invalid claim? Because the rules in absence of partnership deed specifically states that no remuneration will be provided. We can write it down. Then Shyam had advanced a loan to the firm. Okay, he claims interest at 10% per annum. Why? If the partnership deed is silent about interest on loan given by the partner to the firm, then interest invalid. Okay, why invalid? See, the reason here is, we will write down the reason here, no remuneration. Here, interest will be given only but at the rate of 6% per annum on interest on partner's loan. Do remember, this loan is given by the partner to the firm. The third claim is Mohan has contributed 20,000 and Shyam has 50,000 as capital. Mohan wants equal share in the profits. See, the capital is not equal, okay, but he wants equal share. Logically, it comes to our mind that when Mohan has contributed less capital and Shyam has contributed more capital, then Shyam should get more and Mohan should get less. But the first rule, when they are silent about profit sharing ratio, we learned that the profit sharing ratio will be what? The profit sharing ratio will be equal. So, it does not matter how much capital a partner has contributed. If their partnership deed is silent about how to treat profit sharing ratio, invalid claim, it should be equal. Equal PSR. And Shyam wants interest on capital to be credited at 6% per annum. Shyam would have got 6% per annum interest on capital had there been any mention about provision of interest on capital. Even if there was no rate, then Shyam would have got 6%. But the agreement is totally silent about whether to give interest on capital or not. Okay, so we learned that no interest on capital, invalid claim, no interest on capital. Let's see the second question. State whether the following statements are true or false. Valid partnership can be formulated even without a written agreement between the partners. Totally yes, true. Why? Because the Indian Partnership Act does not require a registered partnership. Okay, it can be an oral agreement as well. I hope you all have written this. We can move on to the next one. Yeah. Next one is, each partner carrying on the business is the principal as well as agent for all the other partners. Totally true. Mutual agency, reason is mutual agency point. Okay. Then maximum number of partners in a banking firm, false. In banking we can have only 10 maximum. Methods of settlement of dispute among the partners can't be a part of partnership deed. No, false. Okay, we learned that partners can provide the method. Okay, I told you about the arbitrators. Then if the deed is silent, interest at the rate of 6% per annum would be charged on drawings made by the partner. False. No interest on drawings. And the last one, interest on partner's loan at the rate is to be given at the rate of 12% per annum if the deed is silent about the rate. False. The rate is 6% per annum. With this, we are done with this lecture. Okay, we learnt about partnership deed, and most important thing, we learnt about what? The rules which are present in absence of partnership deed. Most important thing. The entire chapter will revolve around this theory. Now, I'll just have to tell you about the formats of capital, and then we are good to go with the numericals. I know you all are waiting for the numericals, but if we understand these practical points, numerical becomes so easy for us. Thank you.